Hello, YouTube. You want to know about Apple stock? Let's get started. Apple stock will split 4-1 on August 24th. Should you buy it now? I don't even know if that should be a question, because the answer should always be yes. I see three compelling reasons to do so. Apple's top line has come back to life. Apple is growing in China. A much lower stock price will attract more retail investors. So if somebody right now that can't afford $450 for a share, but they can afford $100 for a share, that's going to drive up the price, and it always has every time Apple has split. Apple's rebound in China, its third largest market. The company reported stronger results in Greater China. In the latest quarter, Apple's Greater China revenue inched up to $9.3 billion, with record services and iPad revenue. iPhone sales soared after China reopened its economy between the March and June ending quarters. Apple's iPhone unit sales soared 225%, from 4 million to 13 million, a 62% increase. Apple benefited from the popularity there of the iPhone 11, aided by discounts, and the less expensive second generation iPhone SE, which was among the top 3 selling iPhones in China in the second quarter. The lower stock price will attract more retail investors. While the split will not change anything for Apple's business, it will most likely make investors think that the stock is less expensive, possibly driving institutional investors to buy the stock in anticipation of this rise. Also, Apple expects the split to make its stock more accessible to a broader base of investors, according to Reuters. But not all of them. Many brokerage firms allow investors to own fractional shares, buying, say, $40 worth of Apple stock, about 10% of the share price. I would not be surprised to see the stock split draw in more retail investors who do not like buying fractional shares. In my humble opinion, one of the biggest reasons to buy Apple stock is Warren Buffett's Berkshire Hathaway's Apple stake, which is now 40% of its equity portfolio, is up a whopping $40 billion since the market bottom in March. The investment in the tech giant played a crucial role in helping the conglomerate weather the coronavirus crisis, as other pillars of its business, including insurance and energy, took a huge hit. Investing in such a high flyer seemingly defies Buffett's well-known value investing principles. Berkshire bought its first 10 million Apple shares in May 2016 by one of Buffett's lieutenants. In the span of 4 years, the Oracle of Omaha ditched his usual aversion to tech and increased his bet to 245 million shares, now worth more than $95 billion, to become Apple's second largest shareholder, only behind Vanguard. If you don't know who Warren Buffett is, you need to Google him, because he is probably one of the best investors that has ever lived. And somebody that has that kind of stake in a company like Apple, you can be rest assured that it's a good investment bet.